Hey guys, welcome back to another Weekend Trading Edge video. Seems like I've been away from you guys forever, but I'm excited to be back sharing with you the top 3 trading ideas on my radar for the week ahead and a lesson about what you can do now to become successful, much later. And the idea for this topic came from a few things. One, I was on vacation for about a week and I was answering a lot of questions about, oh, that's so cool. You can just kind of pack up and take a week off whenever you want. And I'm like, yeah, that's one of the benefits of being an entrepreneur. There are a lot of drawbacks as well that the internet and social media world won't share with you. It's not glorious by any means, but one of the benefits is that you have the ability to do whatever you want, whenever you want, and no one can tell you no, which is pretty cool. The other thing that stemmed this topic was the video that I put out to you guys, or I shared with you guys 2 weeks ago in replacement of the Weekend Trading Edge. It was a live stream that we did in our live trading room talking about the CTS system, and a lot of you guys were attracted by that. And the CTS system is something that the combined technical scoring system was a system that really first got me interested in taking baby steps into successful trading. I remember I was in that unconscious incompetence stage of trading where I was just I was doing everything and didn't know what I was doing. Then I finally started having an idea of what I needed to do. And I stumbled across an article by someone that would become my mentor, Jason Stapleton, about a challenge he did. He had almost, I think, a 300% return in about 90 days. And of course, that sucked me into reading the article. And he explained this point-based system he used to quantify his trades. And that's what really attracted me to him because it made sense. It was the first person that talked about kind of putting things together in, instead of just looking for this one thing that would be like the magic strategy, it was learning a handful of little things that would give you the knowledge to create a magic strategy, or not a magic strategy, but a strategy. And that was pretty cool. And I was explaining kind of the rules to that CTS system in that live stream. You can go back and watch the recording if you want. If you're a premium member over at Tier 1, there was a pretty cool Q&A. Just check the Q&A archives on the CTS system as well, customizing it. But I was thinking about that when I shared this quote by Gary Vee the other day that said, "Many of you are worrying about your years while wasting your days. You can't expect 30 years of results from 30 minutes of work. You need to move fast, but understand your vision takes time." And the caption that he had for it was, he says, "Every day I see hundreds of people having the game backwards. People are lazy and passive daily, but stress and are antsy yearly, while the way to do it is to be fast and antsy daily and patient yearly." And this reminded me of another quote that was very important to me from Gary Vee years ago, which said basically the same thing, but in different ways. And I think it's 100% true. And I see this every day in dealing with traders. I see this when I was developing businesses where, I don't know if you've ever been a part of a startup or anything like that, but when you have partners, typically you're spending so much time thinking about the bigger goal. And there's nothing wrong about bigger goal. You need a bigger vision to complete your goals. That big vision is that first step. But people spend so much time working on, what is my company name? What is my company logo? What is my mission statement, right? And I'm not saying these things don't matter. They ultimately do. But what matters first and foremost is doing the things that are actually going to make your company profitable. And especially at the beginning of, building that momentum, you need to be very aggressive. There needs to be a sense of urgency. You need to put in a lot of work to get that ball moving. I always make the comparison of this, right? I don't know how many guys have, pushed a car out of the snow, or maybe you pushed a broke down car. At the beginning, right, to get that car moving from a static position to a moving position, dynamic position, it takes a lot of effort. You've got to put a lot of muscle into it. You've got to rip your legs really, really hard and spin them and push and push and push and push and push. A massive amount of work to get the car moving in that direction. Once the car is moving in that direction, then it takes less effort to keep the momentum going. And business and trading is the same way. With trading, what I see is we see a lot of people, they get into trading, they get excited, they hear all these stories, and they already start mapping out their life, right? When I first started trading, I already mapped out how I would be a millionaire in 6 years. I'd take my account from like 5,000 to a million in 6 years by this magical 20 pip a day strategy or goal that I had. And I spent so much time mapping out that 6-year plan, but didn't invest anything in what was going to make that 6-year plan work, right? And I ended up going nowhere because I was just looking for kind of that shortcut. Okay, let me find this strategy. As soon as I find this strategy, this is going to take me to that 6-year plan. What I learned years later, after lots of failure and lots of time wasted, is that the strategy will come to you, right? The strategy will come naturally to you. And what we harp here at Tier 1 Trading is you want to find something that matches your personality, your philosophy, and of course your lifestyle. But what you need to be working extremely hard on right now, as soon as you begin, are the things that will allow you to create that strategy. So learning about the market, learning the fundamental principles, how to read a price chart, how to identify trend, how to read candlestick patterns. Maybe even if you're digging into indicators, the basics of what these indicators are. Just don't search for the magic indicator. Just don't be like, oh, magic MACD strategy, right? Understand, take time to learn what the MACD is telling you, because at the end of the day, or bigger picture, you're gonna have to customize that MACD to show you what you want it to show you on the chart. So you need to spend a massive amount of time working on these boring foundational elements of trading, which will eventually propel you to creating that bigger strategy later. And that's what the CTS system is. Again, it's a handful of technical things that we teach, where it's Fibonacci, double top, double bottom, simple patterns, breakout patterns, this, that, right? Which in their own right are kind of pointless. They don't really mean a lot. But once you learn all of them, and once you're able to put them together, that's when the magic can happen. So if you're a new trader out there, again, nothing wrong with shooting for big goals and having that bigger picture of what you want your perfect life to be. I think you need that. That's the light at the end of the tunnel. That's the carrot in front of your face. That's going to keep you motivated and keep you going. But don't be in a rush to find that magic strategy, right? Most successful traders take about 9 to 18 months to become successful. And that's just not me saying that. That's some of the top trading firms, like real trading firms, not like the online stuff, like real brick and mortar trading firms, saying that it typically takes that long to become a successful trader. So if you know it's going to take that long, don't rush. Work massively hard on all of the foundational stuff that's going to build that base. And then once you have that base, you're going to see that the strategy and the rest of the stuff is going to come a little bit easier if you do things the right way. So that's today's lesson. And what we're going to do is we're going to dig into some of these charts today. I got 3 trading ideas for you. They're kind of interesting because they're all kind of different in their own little way. So let's hop into it. But before we do me a favor, hit that subscribe button, hit that like button. That's the best way you can support this video that I give to you free each and every week for the past, I don't know how many years. And also, if you have any questions about what I just spoke about earlier, or any questions about anything that comes up in the video, leave it in the comment section below. I got some cool questions a few weeks ago that are going to become Trader Coffee Break episodes. I got some cool questions a few weeks ago that already became Trading Coach Podcast episodes. So I do read through each and every one of them. I do respond, and many of the time, those questions help a lot of other traders out there as well. All right, let's pop into the charts. So we're here on the daily chart for the pound dollar GBPUSD. And I always like starting on the daily to get kind of a perspective of what's going on. And you're going to remember this pair from, I don't know if we shared it here in the video or not, but there was a broken Gartley pattern here on, or bat pattern here on the daily. I think it was right in here. It would have been, yeah, broken Gartley here on the daily, which looked like this. This was our X to A to B, B to C, and C to D right here, which ultimately failed. And you can see price action ran down to a previous level of structure support, a zone over here. And now we're working our way right back up to that previous X leg. So we've been looking at consolidation throughout the week here because we're kind of sandwiched between a previous level of resistance and a previous level of support. You could make a prediction that we're likely to continue downward. I'm not personally a fan of this zone. It's a little bit choppy, so it's hard to really pinpoint a level where price is going to go to. But if you have a bearish bias and you're looking at this as a pullback trade, there's absolutely nothing wrong with this, right? Again, previous structure support, turn resistance, and a continuation down. My thing is just I don't have a clear aiming point to the downside, so I don't really have too much interest in that. So what I want to shift my interest to is a potential move back up into this zone, a potential break of this level of structure and a move higher. And here's the thing that's important to understand, especially if you're new. When I'm saying stuff like this, I'm not saying that it will happen, right? So I'm not saying that put your buy order on right now, buy it because it has to go up. what we're doing here in our trading, at least our philosophy here at Tier 1 Trading of teaching trading, is that we want to be predictive in our analysis, reactive in our execution, which means is we want to take the clues that the market is giving us. We want to make predictions, and we can make multiple predictions where we can make a prediction to the upside. We can make a prediction to the downside. If this, then we're likely to go there. If that, then we're likely to go here. The key is we don't get involved in a trade until two things happen. One, price needs to give us a signal, right? So some type of rules-based reason that tells us that the probability is in our favor. And two, an entry signal, right? Our specific reason to trade. So again, it's not just, just because you make a prediction doesn't mean you need to take the trade. And I bring that up because a lot of traders believe that, where like, once you make a prediction, you have to be locked in right away. And that's just not the case. But if we go down to a lower time frame here, and this is where things get a little bit interesting down on the 4 hour. Many of you guys are going to see the pattern that popped out to you. This is going to be a head and shoulders pattern. And this is a really good example of it because it represents everything that we want to see in the head and shoulders, right? Price action has been in a downward trend, right? So a clear directional move. I take a little arrow thing if I can ever find it. Never can I find it. I'm always in the wrong place here, right? Clear bearish trend here. And if you look at the last leg, and Elliott Wave people, you guys love this as well, right? You look at the last leg, what do we have, right? We have a smaller extension, right? This extension right here is much smaller than this extension, which gives us a sign of loss of momentum or losing strength, right? A stronger trend will have longer extensions with a steeper slope. A trend that's kind of running out of steam is going to have a smaller extension, and a more shallower slope, or more shallower slope. So we have this right here, which is a smaller extension. And then we also have a deeper retracement. Again, look at the depth of this retracement compared to this previous retracement, another clue that the market may be running out of steam. And then we get an attempt at an extension downward, right? And that attempt fails. And when you get a pattern like this is called a head and shoulders pattern. I guess it kind of looks like a head and shoulders. This was your left shoulder. This is your head. This is your right shoulder. This would be an upside down one, so a head and shoulders bottom. And this is a classic charting pattern for a reversal. These are classic ways that the market moves to give reversals. Again, this is one of those things that you should be learning in your foundational elements of your education. And in my opinion, it's one thing to learn what the head and shoulders pattern looks like. That's cool. But to understand why it forms and how it forms will take you to the next level, because now you can learn to ignore certain ones that aren't good. You can learn to aggressively get in the ones that are really good. It's a powerful skill. But to make things simple, what we're looking for here in the head and shoulders is we're looking for a violation of what's called the neckline, which is the uppermost point of resistance. You can draw a slanted one out as well if you're in trend lines and stuff like that. I like horizontal support and resistance, so I just want to get a straight one right here. And if we violate that level, then we're likely to push higher. And if we're likely to push higher, we're likely to go to this level right here, right? Somewhere in this zone, the bottom of that zone being about 132.74, top of that zone being about 134.19. Now, if we want to do a few other things, we can look for some areas of confluence here, right? We can take our Fibonacci extension, right? This would be basically setting up a CTS trade, but instead of using it for entries, using it for targets. Fibonacci extension from our head to our right shoulder line. You can see we have a 127 right at the bottom of previous structure, 1618 up here as well. If we zoom out a little bit and just take a Fibonacci retracement from this most recent swing, so this area of consolidation down here to the bottom of the head, we're going to have a 618 Fibonacci retracement there as well. So we got some nice confluence between a 127 Fibonacci extension and a 618 Fibonacci retracement up at about 3271s. Now, again, it doesn't look like a lot of room here, but imagine you using this as kind of a higher time frame analysis for a smaller time frame trade. You go down to the hourly or maybe even lower here, right? All of a sudden, there's a massive amount of room. Let's say that we push past this level. Let's say we retrace back in here before eventually extending here. You all of a sudden have a move, wrong tool, there we go, of, almost 100 pips there. So plenty of room to take advantage of a trading opportunity here on pound dollar. I actually didn't look at this yet, but let me see something. Is this going to be, I wonder if this is a butterfly here. Ooh, just missed. I was going to say, if it was this is an advanced pattern formation in its own right here. So a deep Gartley right up here. Well, that's not going to be part of our lesson here, so I'll just ignore it. But yeah, I'll just cut this part of the video out. Well, no, I'll leave it in. It's valuable. So this is also a deep Gartley pattern if you were to, here on the hourly, if you were to get up to this 127. So I was going to say a butterfly, which would have been cool because a butterfly pattern with the psychology behind it would have worked perfectly into this head and shoulders mess with the breakout, then the relief, and then the move up, but not going to have it. We do have a Gartley pattern here. So if you're a Gartley pattern trader, you have a deep Gartley pattern here on the pound dollar right at that shoulder line. And remember, there's nothing to fear here because just because we predicted about the head and shoulders, does that mean that the head and shoulders is going to occur? No, we still need that violation. So until we get that violation of the shoulder line, there's no reason to expect the head and shoulders to occur. If we get that violation of the shoulder line, it means this Gartley pattern is invalid. So there should be no conflict between the two signals. But yeah, two good opportunities here. Look at that. 2 for 1 on pound dollar. All right, let's go on to the next one. So here we are on the Euro Aussie, and this is a similar situation to the pound dollar where we're kind of bracketed between two different levels. Once again, if I zoom out here on the weekly, right, looks like or the daily, excuse me, it looks like we're in the middle of no man's land. But if I take my horizontal line tool and just kind of put our lows right there and bracket that area, you're going to see that we're right at a previous area of structure support. So similar to pound dollar, probably even more so, I have no reason to believe that we're likely to continue lower. We've also come back and hit our previous level of resistance right here. Again, previous level of support, once violated, turn to resistance. So we're bracketed in between these two levels of structure. So what I would expect here is some type of consolidation, meaning some back and forth movement, maybe some type of contraction where the market, like the range tightens, but something where the market is battling buyers and sellers before it ultimately makes up its mind. And when we're in periods of consolidation, it offers excellent opportunities to look for pattern formations, and that's exactly what we have here. Going down to the 4-hour, you're going to see that sloppy ebb and flow actually creates a potential pattern formation, right? Let's erase these lines here and we'll draw a few things out. If we look at this as being our starting point, our X leg, this move here, swing low to swing high, this is going to be our X to A. Perfect example of an anchor leg, so a leg that doesn't break a previous level of structure but can still be counted as the starting point of a pattern formation. This first retracement is going to be our A to B. Next, we get this extension right here. This is going to be our B to C. And then, right, the failure to really put in a pullback in a positive direction, meaning that we violate the structure, if it happens, would give us a potential cipher pattern CD completion right down here at our 786. A little long right there, right here. So this would be the zone, the buying zone of this bullish cipher pattern. Now this is a 2 for 1 as well, because this prediction can work in a few ways. Not only can we predict a buying opportunity if price action comes down to this level, right, this zone, but we can also look for a selling opportunity in advance of that zone. And this is the cool thing about learning how to trade. Again, if you learn the skill of how to trade instead of just a specific strategy, you can attack the market in all types of different ways. You're not kind of stuck in only being able to do one thing, a one-trick pony. And trust me, bigger picture, with how market conditions change, you better not be a one-trick pony. You're going to get beat to death. Trust me, I came in with that mindset and I learned a very valuable lesson. But you'll have the ability to adapt and take different opportunities, and that's very powerful. So if I just erase kind of these lines for a second, you'll see that again, bringing my good friend horizontal line. We're currently trading at a previous level of structure support down here. We haven't violated it yet. We got a probe and we got an inside bar. If we can violate this level of structure, and now it would have to be this new low, right? What you can look for from an intraday perspective, so a lower time frame trader, hourly, lower, day trader, something like that, is look for a violation of this level. My preferred method is a pullback, so I always look for a pullback, but you can trade it however you want. And you can look for a continuation opportunity down to that cipher completion. Or if you're not a cipher trader, just trade it all the way down to wherever you project price to go to, right? If I weren't looking at this as a pattern, I'd probably adjust this just slightly about right here. You can look even lower, maybe even put in a Fibonacci inversion there, see where that 1618 lies. Just curious here. Not video relevant at all, just random Akil thoughts. This is what I tend to do. 168 is going to be a little bit lower. Yeah, you can shoot down there. So different opportunities here on Euro Aussie. Again, one bullish cipher. And remember, with these cipher patterns, if you guys are brand new, we're not looking for reversals. So if you remember my original analysis, I told you I have no reason to think that price is likely to continue up to the moon, right? So what we're looking for here is just, these are, I consider them counter trend trading opportunities, although many of them could come in trend continuation opportunities or situations as well. But what you're looking for in the majority of these patterns are short little pops. So move from here right back up to a previous level of structure. So it's not fancy, it's not sexy, it's not going to get you all the likes on social media, but what it will get you is consistent profit. And if you're a real trader, right, and not just a marketer, consistent profit is the most important thing for you versus those likes. Those likes don't pay the bills, right? Secret. All right. Let's move on to our next pair. So before I get into my top trading idea for the week, I want to do a little bit of shameless promotion. Bear with me for a little bit, but head over to our website, www.tier1trading.com. Feel free to explore all the fun stuff, the explanation of what we offer here on the platform. Hey, Mike. But what I want you to do today is go over to the left-hand toolbar and click the button that says free trading. There's a free workshop for you called The Truth About Forex Trading. I highly recommend watching it. It's 100% free. It costs you nothing. It's going to be a great investment in your future, meaning it's something that you can do now that's going to start that work that's going to enable you to be where you want to be in the future. So www.tier1trading.com, click the button that says free training. Of course, check out anything else you want to as well. Now let's hop in to my number one trading idea for the week. All right, so our last pair here, our final pair, trade of the week, right? Number one trade of the week. It's going to be here on the pound Aussie. And this is another interesting one where we are bracketed between multiple levels of structure, right? We had a good conversation this week about correlations in the market. I'm going to put it out as a Trading Coach podcast. I don't know if I scheduled it already. Give me a second. If I did, I want to show you guys. And if you're not subscribed to the Trading Coach podcast, do it. You should be, but give me a second, see if I can show you when it's coming out. I'll give you kind of a sneak behind the scenes look at the episode. It's coming out in Trading the Zone, dealing with correlations, episode 629. Looks like it's scheduled for March 24th, but it's good to talk about correlations and should we trade correlating pairs? Do correlating pairs actually have importance, and how to be smart in setting up our portfolio so that from a money management and a risk management perspective, we don't have to deal with kind of overexposure in the market. And I don't know if you guys ever heard my story. If not, go back to Trading Coach Podcast episode 0. But when I was managing money, I lost about $30,000 in a single week. And the main reason for that was because I was overexposed in a specific currency pair. Natural disaster hit, and they all kind of flushed in the wrong direction at the same time. And I learned a valuable lesson about risk management. So there is some value to that. So check it out, March 24th. Of course, check out all the other episodes as well. But we're here at a previous level of structure, support. We've bounced back, retraced back, just like the two previous pairs we looked at with hit resistance. And now we're back down here. Now, there are a few pairs on your charts that look like this. What stands out to me about this one is that we came down. We created what's called a double bottom, which is a retest of structure. So this is our initial test. This would be bottom number 1. We retraced off of that, nice 3-bar reversal here. We came down the retest. We held. That's going to be bottom number 2. We like to pair that with our RSI, our relative strength index, and look for what's called divergence. So basically, when price action is doing something different than your chart. So you can see price action putting in essentially equal lows right here, but we're putting in higher lows here on the RSI. That's called divergence, and that's typically a sign of some type of short-term reversal. That's a good thing to pair it with. Oversold and overbought, this is another good thing to pair with as well on that initial bottom. So you can see we're oversold there as well. But what stands out to me about this one is that after we made that double bottom, we actually put in a higher high, higher close, right? We put in this green candle right here, broke out and created a higher high and a higher close above structure. And then we did that again here. So this actually sets us up for a trading opportunity called a 2618, which is basically a double bottom, which is the 2, followed by a 618 Fibonacci retracement. This is another strategy that was taught to me by my trading mentor, one of my trading mentors, Jason Stapleton, where essentially it was a secondary chance to get involved in a double bottom. You can look at it as more of a conservative chance as well. But what's cool about this is, again, this 2618 has actually drifted pretty low, and we may be setting up a kiss of death. We're not going to talk about that here, but that's another method we can look for. But if you're looking at this trade from a risk perspective, right, ask yourself this question. I want you guys to be involved before I give you the answer, and I'm having trouble finding where all of my stuff is at. Where do you know you're wrong, right? And this is kind of the general philosophy of how to play stop losses in general. Where do we know you're wrong? Where does price action have to go to tell you that, hey, enter name here, your prediction is wrong? Because our idea of stop losses is we want to have them far enough away to give us breathing room, but we also want to be wrong as soon as we know we're wrong. We don't want to be wrong because we hope we're wrong. We don't want to be wrong because 10 pips away from our entry tells us we're wrong. We want a technical reason to be like, the probabilities have shifted. Originally, I took the trade because the probabilities are in our favor. Now this has happened in the market. The probabilities are no longer in my favor. Let's get out. Very similar to the sports betting. Imagine that you're betting on, I'm fired up because Everton got a victory. We may avoid relegation. Oh man, the chicken skin down to 10 men, right? A red card that wasn't deserved down to 10 men, and Alex Iwobi, out of all people, the person we might hate the most on the team, game winner, jumped out my skin. Oh my gosh. Whew. Still hype. We won a game. Everton never wins. Sorry, I'm excited. We never win. Look at the table. But imagine betting on a team, right? That's a heavy favorite. We'll take football, for example. Imagine the Tampa Bay Buccaneers are playing the New York Jets, right? The Tampa Bay Buccaneers are a really good team. The Jets are a really bad team, right? The probabilities at the beginning of the game are that Tampa Bay is probably going to win because they're a better team. But so you place the bet. All of a sudden, their quarterback gets hurt, Tom Brady gets hurt, their running back, their wide receivers get hurt. Let's say everyone gets hurt. Wow, well, now you're in a different situation, right? It's no longer the same situation as, hey, this team is the heavy favorite. Certain circumstances have happened that change the probabilities around. And at that point, you probably want to get out of your bet because the odds of your initial bet winning is low. So trading is the same way, right? We take trades that are high probability trades, or the probabilities of us winning are in our favor. I hope so. If you do it the other way, you've got a problem. But once the market has shown us something that says, hey, things have changed, we're probably not going to go your way, you want to get out. And what professional traders do is they get out with minimum loss. Now, I'm not saying take your stop loss early. That's a whole different thing that will get you into trouble. But you don't need to take more of a loss than you need to know you're wrong. When you know you're wrong, or when the market tells you you're wrong, accept that you're wrong, throw your ego and your pride out the way, get out of the trade and save your money for that next opportunity, right? Better that than going broke living off the hopium where market's, sinking and you're hoping it turns around and hoping it turns around. You shoot Akil that email. Hey, Akil, do you think pound Aussie is going to go bullish soon? Because I got a trade in and no stop loss and I'm losing money. Right? Bad idea, but a realistic email that I get probably at least once a month. So I gave you enough time to kind of think about your answer there. But your stop loss should be below the double bottom, right? If this, you're trading this double bottom, initial hold, secondary hold, if this level is broken, right, especially with the higher high, higher close here, you're most likely wrong. So you don't have to have your stop loss that far away to know you're wrong, right? Let's say you get your entry reason right here. So you've got a stop loss that is right down here. And obviously there's a rules-based reason for placing your stops. We're throwing them on here in the video. And you can look for a retest of targets, a retest of highs up here. Now, because of the bigger thing, I wouldn't shoot for at least first targets any higher. I don't see any reason, going back to probabilities, that we're more likely to continue higher than we are here. But this is about a 4-to-1 risk reward to retest these structure highs. And even if you want to get more conservative, even if you want to kind of pinpoint this, we call this a pregnant pause, but this little area right here, which would be consolidation on a lower time frame. Don't believe me, just watch. Told you, right? This big elephant candle right here. Even if you want to be more conservative, let's say look at that area. Even at the very lows of that area, like the most conservative you can be here, you're still looking at, get this thing over here, almost a 2-to-1 risk reward, which isn't bad. And you can have your secondary targets at the high. So I think this is a really good trading opportunity because the risk is so minimum here on pound Aussie. And risk reward, good risk reward opportunities are something that I look for. And when I get them, I like to be more aggressive with them as well. So that's the video for this week. Hit that like button, subscribe. Make sure you check out the daily live stream I've been doing every Tuesday, Wednesday, and Thursday. We give you a sneak peek inside our New York live trading room, meaning you get to sit in with a great group on YouTube. You get to sit in with a great group, obviously on the platform, and we discuss the #1 trading idea that's on my radar for the week ahead. Just subscribe, hit that notification bell. That way you don't miss the alert when that live stream is about to go live. All right. I'll see you guys Monday for you guys on the platform for the Q&A. Rest of you guys, I'll see you Tuesday in the live stream. Until next time, plan your trade, trade your plan, enjoy your weekend. Go Toffees.